In the news today, Skeena Resources, that's SKE on the Toronto Venture Exchange and SKREF on the OTCQX. They filed their Eskay Creek technical report. We've got me now President and CEO Walter Coles Jr. Hey Walter, appreciate the update here. Why don't you go ahead and run us through this one and how it fits into the overall scheme of things for the company?
Yeah, sure. So things are moving pretty fast here. Since we talked in February, we put out a new resource for Eskay Creek, and it's primarily an open pittable resource with a gold equivalent size of about almost 4 million ounces with an average grade of about 4.5 grams. And all but 300,000 of those gold equivalent ounces are open pittable. 300,000 would be accessible via underground. I would argue that this is the best open pittable deposit held by a junior mining company globally. So, this is the reason for our excitement. The average depth of the pit that we've modeled is 180 meters, so it's a shallow pit. Typical open pit mine, typical grades are like a gram. And in this case, we've got 4.5 grams. And then what's even more exciting is we are pretty confident, hopeful and confident that we can increase this resource to over 5 million ounces this summer with drilling and increase the grade from 4.5 to over 5 grams per ton. So, it's just a special deposit that is going to drive our stock price much higher from where it is today.
And as far as activities planned for the summer?
Yeah, so the next catalyst for the company is going to be metallurgy. We expect to put a metallurgical report out in May, probably the middle of May. And the reason that's so important is because Eskay Creek has a reputation as this ultra high grade mine from the 1990s and early 2000s that with the high concentrations of gold and silver came deleterious elements like mercury and antimony. And so that's why people are like, oh, it was a high grade mine, but could it be economic today with all the deleterious elements? And what people don't understand is that the majority of the ore that we've identified is in what's called the rhyolite host rock, and the rhyolite doesn't have any of those deleterious elements. So, we're very confident that the metallurgy will show that we do have an economic deposit. It's not going to be impaired by deleterious elements, but this industry is full of risk, and I think a lot of people rightfully want to wait and see what the metallurgy is. So that's why that catalyst in May is going to be huge for the stock. Second catalyst after that is going to be a PEA, which we expect to put out in the beginning of the third quarter. And that will lay economics down on the project. So the metallurgy feeds into the process design and the CapEx. So we need the metallurgy done before we can finalize the PEA. But I expect that we're going to have pretty phenomenal NPV and IRR numbers with this project. You don't, with grades like we have here, 4.5 to pushing over 5. Like this is going to be an extremely robust project economically. So that PEA is another huge catalyst for the stock. And I expect it out some point, probably July. And then I expect that we'll start drilling at Eskay in June. And so we'll start to have drill results probably late July, August, running through the second half of the year as we work to expand the size and the grade of the deposit. So for the valuation of our company, only 40 million bucks, or 40, I don't know what it is today, 44 Canadian. It's nothing relative to what we have here. I mean, when I look at our stock and go, what's the risk-reward profile? To me, it's an asymmetric situation. The risk of this stock going down versus the risk that it goes a lot higher is weighted definitely, in my opinion, to the upside. So I encourage all of your audience to take a hard look at Skeena. It's still very much the early days, but I think our stock's going to be a rocket ship.
Okay, some strong words from the President and CEO, Walter Coles Jr. Skeena trades in the venture under SKE and on the OTCQX under SKREF in the States. So, all right, we'll look forward to tracking Skeena's progress here in the future as they have more to report.